So we're entering the tax season, and many of you are probably organizing your taxes and getting ready to file your income tax. The deadline is April 15th, which is just coming up. It's around the corner. Today I have a chance to talk to my CPA Ngu Phan on the top tax write-offs a homeowner should consider when it comes to filing their 2023 income tax. Okay, so Ngu, as a homeowner, what are the top tax write-offs they should consider when it comes to filing their taxes?
So if you're a homeowner, you should definitely itemize your deductions, and itemized deductions that will help you most are your associated with your home, are your property tax payments that you made during 2023. Make sure you go back and determine what payments you made in 2023. You might have bought a new house and there's supplemental payments that you may have not accounted for. Some taxpayers will pay both their installments and their property taxes all in one year to maximize their deductions. And you also should include mortgage interest. And the mortgage interest is deductible to taxpayers, but there's a limitation on it. So you should be aware of that. You should let your taxpayer know what kind of loan you have, whether you have a large loan, meaning that if it's over $750,000 mortgage liability or $1 million. And it all depends on when you acquired the property. So this is a common area where people have deducted too much mortgage interest because their mortgage didn't follow the rules when the rules changed. So keep in mind how much your mortgage is and whether the limitation applies to you, because you want to make sure you report the deductible mortgage interest and not one in error. The other considerations for homeowners is if you made improvements on your property, you should always keep records of that. A common mistake is that you buy a house in year one and then eventually you sell the house, but you forgot all the improvements that you made. You might have remodeled the kitchen. You might have bought new appliances. Those are all part of the cost of the home that will stay with home likely. So you want to include that. That could range from tens of thousands of dollars to remodels that cost hundreds of thousands of dollars. So you should include those improvements because that'll add more to your cost basis when you determine your gain. So those are common mistakes that people don't keep track of and records of. You should keep all those records in a digital secure place so that you have it for your CPA or for your future filings. As a homeowner, if you have a family, make sure you include all your dependents. Every child that is under 18 is allowed to have a $2,000 credit per individual as long as your income is below a certain amount. So make sure you include all your dependents and claim your credit for each individual. The other low-hanging fruit that people might have forgotten is that they might have bought an electric vehicle in 2023. That electric vehicle has a $7,500 tax credit you could be eligible for, subject to certain income levels. But keep in mind that is also credit that you can get against your tax liability. Some taxpayers may have improved their home in the way of solar panels. Solar panels had an immediate 30% credit that you could apply to your home. So if you added solar panels, take a look at that so that you can have those records and you can take the deduction for that. So another additional deductions that homeowners can take is their charitable contributions. Now that includes cash contributions as well as non-cash. So if you made several trips cleaning out your house and you donated a sofa, furniture, or other things that might have gone to charities, you should be able to deduct those on your tax return. Maintain those receipts on record. It doesn't have to be paper. You can take a picture of it. You can scan in your documents so that you can organize your deductions in a way that you can keep them for your tax CPA. Deductions for charitable contributions could also include artwork that needs to be appraised. That it can include items that you may have donated stock. So you need substantiation of any type of property that you donate, whether it's cash or non-cash. One thing that some taxpayers forget is that donations to churches. Sometimes you go to church every once in a while and you donate to the church. Those cash donations that you may place with the church are deductions as well. Don't forget those and make sure you include those donations in your tax return.
Hopefully you get some good tips from my CPA. This is a different type of video I'm doing. If you'd like to see more tax strategies, more tax tips, please comment below so I know to focus on those more in the future. If you want to discuss your personal scenarios, you have been filing taxes using TurboTax and you want to talk to a live CPA, feel free to contact my CPA Ngu Phan. His email is down below, so feel free to send him an email to discuss your individual circumstances.